Hi all, welcome to another video. I'm Sujitam Sridhar, and in this video you will hear about SARFAESI Act, Securitization and Reconstruction of Financial Assets and Enforcement of Security Interest Act 2002. We know that earlier days it was a difficult job for the banks to recover their bad debts or non-performing assets because they had to approach a civil court, file a suit against the borrower. That means it involved a lot of legal procedures and provisions, and apart from that they had to spend much money and time on that. But with the implementation or enforcement of this SARFAESI Act 2002, with some important amendments made in the year 2016, this recovery process for banks is no longer a difficult one, because this act empowers all banks to recover the bad debts or non-performing assets by taking possession of the security made against the loan and sell it, so that they can easily recover the outstanding loan amount from the borrower. So be very careful. If you are going to take a secure loan, ensure that you make all repayments on time, and if you fail to make a repayment of that loan taken, bank can easily recover from the security made against that loan. And of course, as all other acts or laws, this act also has many ifs and buts. That means many conditions. And if banks have to follow that recovery process, as I already mentioned earlier, the loan should satisfy four basic criteria. First criteria is that it should be a secure loan. Secure loan means a loan which is backed by a security. For example, if you take a home loan, your house is considered as a security against that loan, and we call, in banking terminology, we call it as mortgage loan. And if you take a vehicle loan will be considered as a security against that loan, and in banking terminology we call it as hypothecation. And if you take another example, gold loan, in that case gold will be considered as a security against the loan taken, and in banking terminology we call it as pledge. And the second criteria is that the loan should come under non-performing asset. That means it should be classified as a non-performing asset. And the third criteria is that the outstanding loan amount should be more than 1 lakh, and 20% of the outstanding, 20% of the principal and interest thereon. And the fourth criteria is that the backed security should not be an agricultural land or agricultural property. Of course, before proceeding with this recovery process, a bank has to give a notice to the borrower in writing with a period of 90 days. Anyways, remember, this act, SARFAESI Act, Securitization and Reconstruction of Financial Assets and the Enforcement of Security Interest Act, Security Interest 2002, added with some amendments, important amendments made in the year 2016, empowers all our banks to recover the bad debts and non-performing assets without approaching a civil court. So I'm underlining the point: be careful and ensure that if you're taking a secure loan, please make sure that you make all the repayments or installments on time without failure. Thank you for watching, and I will see you in the next video with a new topic. Till then, bye. Please subscribe to my channel, share, like, and write your suggestions and valuable comments in the comment box below.